Let's get going. All right. Good afternoon, everybody. Welcome to our conference call on this fantastic report that our China economics team has put together under the leadership of Mo Ji and Nathan Chow, Samuel Sen, Byron Lam. They have written this 46-page report, China 2540 Outlook, Tech and Policy Foundation. It's been almost like a 3-month process, right, guys? Long process, a lot of work, and we're really proud of this report. And I'm sort of really encouraged that the team has not only looked at the macro foundations of the China economy, addressed the near-term stresses, and come up with a very good macroeconomic model to forecast growth out, but also looked at the transformational and consequential changes that are happening in China beyond the usual stuff. The usual stuff is property market distress and trade war and aging, but there's not just that that's happening in China. It's a bit like saying China's growth in the 2010s happened because China was investing in 2010s. No, it's happened because China had reached universal literacy in the 1990s. It's because there was a town village enterprise related reforms that were happening in China in the 1980s. So sometimes what will happen 10 years from now is a function of the foundations you lay down today. So right now, although we have to consider the fallout from trade war, we have to consider the issues related to the property market distress, we also have to look forward to the ingredients that are being put in place that may provide fruits or create constraints 10, 15 years out, which is why this report is about the remainder of this decade and all of next decade. The way we will do this presentation is Mo Ji will start, get us going with the economic foundations of the report, and then Nathan, Sam, and Byron will take turns presenting certain sections, and we will be able to take your questions. This is a WebEx call. There's a little chat box down there. I've already posted a message welcoming all of you to the call. Feel free to write your comments and questions. We'll keep an eye on them as we go through the presentations. We'll take some questions and answer them. With that, Mo, get the show going.
Thank you, Tama, for the introduction. So it's a lot of work, but it's very meaningful, for us to look at, China for the next 15 years. That actually covers the next 5-year plan, 3 5-year plans, the 15th, 16th, and 17th. So this is important. But before we touching on what's going to happen on the side of tech and also policy, I still want to talk a little bit about what are the challenges facing China, as just now Tamo has been mentioning. There are still prominent challenges facing China. China's aging population is shrinking the workforce and raising dependency ratios, straining resources for innovation and growth. So the property downturn has eroded household wealth and also dampened consumer confidence. These twin challenges misallocate capital and weaken labor force dynamics, undermining the productivity. So from this chart, you can see for the aging population remains a structural drag on the long-term economic expansion, shaving around 0.4% of annual growth projections. So the demographic shift is driven by the rising life expectancy and persistently low birth rates. In 2023, individuals aged 60 and above accounting for 21% of the total population, or approximately 297 million people. So the figure is set to surpass 400 million by 2035, exceeding 30% of the total, and is projected to top 500 million by even 2050. So life expectancy continues to climb, reaching 79 years in 2024, an annual rise of 0.4 years from the previous year. The other one is about the fertility rate have declined sharply between 2019 and 2022. The birth rate fell from 10.41 to 6.77 per 1,000 people, while the number of women aged 15 to 49 shrunk by over 4 million. So the survey also tells us from 2017 onward, that children may be planned to have an average of only 1.6 children, below the population-wide figure of 1.76. Signaling, the further declines is ahead. These trends are already affecting China's total population. So China's total population expected to contract at a compound annual rate of around 0.34%, reaching 1.3 billion by 2040. So most significantly, the working age population, which is 15 to 60, is projected to shrink at an even faster rate of 0.8% per year, deepening the labor supply constraints in the years ahead. For the retirement age, in response to a shrinking labor force, China has announced a gradual increase in the retirement age. In March 2025, they have introduced a phased reform set to unfold over the next 15 years. Under the plan, the retirement age for men will rise from 60 to 63, while for women from 50 to 55, for blue-collar workers, and 55 to 58 for the white-collar workers. So what really is about for China in terms of the employment, the shrinking population aside, employment population ratio has also been falling ever since the 1990s. So the employment rate started to decline since the SOE layoffs in the late 1990s and early 2000s, resulting in a significant job loss. Meanwhile, the youth have been delaying their entry into the labor market amid the expansion of higher education. Since 2019, you see the youth employment has been another headwind for the overall employment level. The weak property market, tech sector crackdown, and subdued consumption sentiment have been stressing the job market, particularly for the youth adults. Highline jobless rate hit 5.4% in February 2025, while that youth stayed elevated at 16.9%, even after the data revised in the second half of 2023. Next page, please. For the property market, is the biggest challenge for China, even in the next 15 years. We know since the late 1970s, China's economic landscape has been profoundly shaped by the capital investment. CapEx was attributed to three main categories: manufacturing, infrastructure, and also property. While the contribution of capital will inevitably decline as the Chinese economy continues to transform towards a consumption-driven one, over the next 15 years, the annual contribution of capital will fall from the peak of 6.5% in the 2002 to 2007 to only 2.1% in 2025 to 2040. Amongst all, the drag from property sector will be more apparent, given it is the biggest share of the China's fixed asset investment. And we know at the peak, it's accounted for over 31% of total FAI in early 2021, before heading south to just over 20% as of February 2025. So on a 12-month basis, we have done some analysis. On a 12-month moving average basis, the residential inventory had been rising to 30 months before retreating back to 27 months. But this is far beyond the government's target of 18 months. So such imbalance is weighing on property prices and also on home buyers' demand. So therefore, it's creating a vicious cycle. Property developers therefore refrain from reinvesting their earnings. Based on historical data, this negative loop could only be broken when the inventory level reaches around 17 months. Average selling price on a month-over-month base will start to turn positive thereafter, and developers will only start investing 6 months after prices have stabilized. So according to our estimation, this will only happen around mid-2028. So we're still 3 years, away from it. For the property long-term outlook, for 2031 to 2040, the excess supply could remain as a source of concern over the medium long term as aging population wobbles. According to our estimation, the annual demand for residential property will fall from the 1,600 million square meters in 2021 to 750 to 920 million square meters by 2030, and further contract to 520 to 350 million square meters through 2040. This is largely attributed to, number one, the falling average household size amid lower marriage rate and birth rate. Number two, the steady average living GFA per capita for home buying population, where the wealth effect is offset by weaker demand for large apartment from elderlies. Number three, receding home buying population aged between 20 to 50 And also number 4, the vehicle demand per family, given the inherited property. So these 2 challenges, one is aging, the other is property. It will continue to be, the challenges in the next 15 years, but the dynamic is also changing. Now I'm turning over to Sam, please.
Thank you, Tamo, and thank you, Mo, for the introduction and our view on the challenges that the Chinese economy is facing. So moving on to the next section, I will first talk about the our model to project the long-term growth, as well as the the tech and AI development, and then I will pass on to Byron for the application of AI and technology, and Nathan will also talk about the structural reforms like SOE reforms, consumption boost, and so on and so forth. So let's first start with the solo growth model. So in the model, the long-term GDP growth is a function is derived from, as a function of A, K, and L. So A is a catch-all variable for total factor productivity and human capital, and then K is capital itself, and L is labor. So for capital, it is defined as a real investment as a percentage of GDP, which is always as roughly 40% of GDP throughout the past decades. And this was driven by the infrastructure and property investment that Mo has mentioned. And in particular, property accounts for like maybe even over 30% of the GDP and the FAI. So that's why if we look at the table here, the capital investment will see as the contribution of capital has been slowing down, and then it's expected to only contribute to around 2.1% of the GDP in the next 15 years. And then if we look at labor, this is also another drag. So labor will stay in negative given the aging population, and labor itself is another function of population and employment rate. So here, although we are saying aging population is the big problem, but also if we can create more jobs for the labor market, then the negative effect of the labor will be cushioned as well. So I will talk about this in the next slide later. And then so let me jump to the conclusion. So for our base case, China real GDP growth is averaged to be at around 3% annually from 2025 to 2040 in the next 15 years, with a terminal rate, which is the growth rate of 2040 at 2.5%. So this growth trajectory suggests that China remains on track to achieve its goal of becoming a middle-income society by 2035, as per the government target, and with the GDP per capita reaching the US dollar 21,000. So, but this 3% annual growth rate, right? It still marks a substantial slowdown from what we see in the past, like 4 or 5% growth in the past, at least in the past 5 years, right? So it is primarily driven by the weaker capital accumulation and shrinking labor force that we have discussed. But we see the total factor productivity to return to positive on the basis that we have a stunning tech development. As we all know, DeepSeek and all other tech companies are doing a very great job over the especially over in the past quarter. And given the structural reform, we think that productivity will increase. So here we also set out the bull case and bear case, which GDP growth in the next 15 years could range from around 2% to 4%, and this is affected by whether the tech development could really create jobs, could really boost investment, and whether it can really improve the productivity, or it is just a waste of capital investment. Other factors include the CNY exchange rate and the CPI as well, and which is a condition, which is conditional on the external conditions like we discuss every day on trade war, tariff, and kind of things. So these will all affect the long-term growth rate of China. But under our base case scenario, we're expecting a 3% growth in the next 15 years on average, and at the end of 2040, we're expecting around 2.5% growth. So next slide, please. So here we before we move on to AI and technology, we first talk about the labor and productivity. So As we have set out the scene in the previous slide, the future growth engine hinges crucially on productivity growth, right? So, in fact, China's labor productivity has been, the highest amongst the world. So if we look at the chart on the left-hand side here, the average annual growth of labor productivity was at 5% on top of the world. And then it's even faster than Vietnam, other emerging markets. So, given China's is on aging population, but the headline growth is still remaining at around 5%. So it must be the case that the labor productivity itself has been growing very fast. Otherwise, we wouldn't see an aging population. At the same time, the real GDP growth can still sustain at 5%. So in the next section, Byron and I will discuss further how technology will enable this. Another thing I want to highlight here is that labor may not for as much as we think. So as I just mentioned, right, labor is a function of, total population and the employment rate. So employment rate is another variable, right? So job creation is whether the tech advancement can create jobs will remain a very big question or a key factor on this equation. So maybe less reference to what happened in the U.S. economy as well, because U.S. has a more profound and a complete set of labor markets data. So let's say if we look at the U.S. Employment to working age population ratio, actually has been growing during each of the tech advancement era. So for example, like 1990 to 2000 during the internet and PC boom, the employment to working age population ratio has been rising. During the e-commerce boom after the GFC, it has been rising. And during the AI and robotics boom, it's also rising and reached a historical high of around 75%. So we're expecting the same thing to happen in China. Technology usually brings not just productivity growth, but also create new jobs. But to be sure, there will be some jobs to be replaced, like maybe truck drivers to be replaced by auto driving. So for those who are highly exposed to technology, and at the same time the performance requirement is still very low, they will be very at risk. So we are looking at like truck drivers or clerical employees may be at risk and could be replaced by the AI. Okay, so here is we set out the stage for our long-term growth model, and then we'll talk about the details on AI and tech development. So can we go to the next slide? Thank you. So here we are. Here we first talk about the AI investment. So China's aim at championing the global AI leadership through self-sufficiency in AI chips, and the relevant supply chain, and they have set a national target that China as the AI innovation hub by 2030. So this will require very rapid investment in AI data centers, supercomputing infrastructures, chips, and energy infrastructure. So over the past decade, China has been the China venture capitals, especially the government lead ones, have invested over 900 billion RMB into relevant industry, and then with 23% of these investments are directed into specifically for AI firms, and data center is also one of the key investment theme, because China, if let's say for example, China has been investing approximately at around 43 billion in data center for the past just two years under the Eastern Data Western Computing Initiative. So this will help China to transform itself into AI innovation hub, because without a data center, it is very, very difficult to to carry on with all these AI innovation. So if we look at the chart here, right? So let's say for the chart on the left-hand side, we are expecting the overall China AI market to increase all the way to 26 billion US dollar, the overall market size, and of which a lot of it, of course, it will be hardware investment, like what we have just discussed, like data center, semiconductor, and so on and so forth. And then it will be software that will be more on the the application side of the of AI, like healthcare and education, cobalt kind of things that Byron will also talk about it later in his section. So and then if we look at the use case here, right? So we have like emergency response, public safety, and these kind of things that will achieve like over 20 to 30% CAGR growth in the AI application moving forward. So may I go to the next slide, please? Yep. So and then we move on to the computing, the computing power here. So here we have China has the world's second largest computing power hub, which leads to a huge number of supercomputers. So the country computing capacity has expanded rapidly, reaching 246 EFLOPS in 2024, with intelligence computing exceed 76 EFLOPS. So it is expected to increase by another 50% to over 300 EFLOP, in the next 2 years' time. So here, quantum computing is also another key theme that we have to look at if we talk about computing power. So quantum computing is a cutting-edge technology that allows computation at a very high speed that the classical computer cannot compare. And let's say these quantum computers will process multiple possibilities at once, which we call it the superposition. So quantum computing could improve the productivity and speed up AI training and data analysis, for example, like let's say for the healthcare system. Drugs discovery can be, the process could be fastened, so much because, the scientists, they can stimulate the molecular structure and new drug development in a very speedy way. And then let's say for logistics, it also optimizes the complex supply chain network. From a cybersecurity perspective, quantum computing can also protect us from a lot of cyber attack. So how is China doing in this field? So US, of course, is still dominating the quantum technology, but China has been doing a lot of significant things in quantum communication itself, which enable ultra-secure data transmission. So if we look at the chart on the left-hand side here, we can see that the number of quantum tech papers for China, it has already outpaced US, but a lot of them are in quantum communication instead of quantum computing itself. So looking ahead, we think China will continue to catch up in this field, and in a tight competition against the US. So already China government has been pledged to increase the public spending by four times, in the next couple of years, and we are expecting more, quantum tech papers and development to come in a couple of years' time. So next slide, please. And then semiconductor, of course, is the key enabler here, right? So the China's Made in, we have a vision of Made in China 2025 initiative, which prioritizes self-sufficiency and global leadership in critical technologies like semiconductor. So China's foundry are already among the largest in mature node chip production in the world. And our analyst team, our equity analyst team, sees high probability that China could secure over 50% of the market share in global mature chip supply within the next decade. And to support this initiative, the government has planned to allocate another 55 billion in 2025 towards fundamental technology, including the semiconductor. So if we look at the chart on the left-hand side here, tech-related fixed asset investment has been registering double-digit growth since 2010. So in the past 15 years, the annual average growth is over 10%. So which is really stunning. And the growth of semiconductor manufacturing is also much faster than the rest of the world. If we look at the chart on the right-hand side here, the China growth, the black line, has been growing much faster than global growth in 2024, and it is expected to outpace the rest of the world towards 2028. So building on this semiconductor strategy, China is also on track to dominate the AI chip market by 2040, which the market share is expected to exceed 50% according to our sector analyst. So may I go to the next slide, please? So how can AI help us? We have discussed so much AI investment, which is the main application here is, of course, industrial robotics. So China has set a very ambitious goal for manufacturers to achieve 70% of self-sufficiency in high-end robotics components by 2030 as part of the broader technology advancement and smart manufacturing strategy. So robot densities is one of the key indicators that we have to look at if we look at a chart on the left-hand side here. So China's robot intensity has already outpaced the US at around 302 per 10,000 employees. But it is still, nowhere compared to other advanced manufacturing countries like Korea, which is at, over 1,000 per 10,000 employees. So clearly, there is more room for China to grow in terms of industrial robotics density. So by 2025, China plans to deploy over 100,000 AI-driven industrial robotics annually. And actually, if we look at the chart in the middle here, China has been doing this very well. So here, the chart in the middle is saying the installation of industrial robotics for China, it has been outpacing the rest of the world since 2021. So you can see in the chart here, let's say in 2021, China has been installing 275,000 units, comparing to the world is just 2051 for the rest of the world. So China has a leading edge here and will continue to speed up this given the AI development. So for collaborative robot, or we call it cobot, so for this market, according to IDC, the International Federation of Robotics, this kind of industrial cobot market in China is expected to increase at a CAGR of around 35 to 36% in the next 5 years. So these will be like, of course, include automotive and the related components, of course, laptops, computers, this kind of 3C electronics, and other mechanical manufacturing or semiconductors. So these are expected to see very strong growth in the next couple of years. So may I go to the next slide? So for robotics here, we are talking about quadruped robotics and also humanoid robotics. So for quadruped robotics, China is playing a leading role. As we all know, Unit 3 has already sold 2.3 million units of quadruped robotics in 2023. Unfortunately, this is the latest number we have, but at least since the past 2 years, China contributed to 70% of the global market in terms of quadruped robots. So on humanoid robotics, China is also aggressively advancing it. So if we look at the chart on the right-hand side here, we can see we are expecting a strong growth here, and let's say China has a goal to achieve a mass production by 2025 and achieve the position of global leadership by 2027. So government has seen humanoid robotics as a very critical solution to aging population crisis, because in the past few slides, right, we are talking about China is running out of labor, despite there is a high unemployment rate, but the labor supply is shrinking because of aging population. So humanoid robotics is the thing that can replace the human, right? So it's really there is an urgency for China to push forward this in the midst of this aging population. So there will be application in education, elderly care, for example. In the elderly home, we are running out of nurses and nursery. Then we need the humanoid robotics to help us with that. And then for logistics and so on and so forth. So by 2035, China's humanoid robotic market size is projected to reach 570 billion RMB, and with a CAGR of over 45% in the next 10 years. So we are also expecting the humanoid robots adoption in China manufacturing sector to reach approximately around 26% by 2035, and by 2040 it will reach 50%. So such adoption rate is expected to enhance the productivity, according to our estimation, by around 20 to 40%, and reduce the labor cost by up to 48%. So this is how AI and robotics can help with our aging population and productivity growth. So in the next section, I will pass on to Byron. He will talk about how the actual application on healthcare, elderly care, or agricultural sector moving forward. So Byron, please. Thank you.
Okay, thank you. So when we are talking about the challenges in China, right, the aging population, the first thing we can think of will be the AI adoption on healthcare. So China has set a big goal for healthcare in 2035. They want to improve people's health and make sure everyone can access a good healthcare. Key plans are reducing differences in healthcare between rural and urban areas, building more hospitals, and using AI and robots to take care for elderly people. The healthcare costs are expected to reach 2.5 trillion in the next 10 years to next 10 years. To control these costs, China is making change like making it easier for new drugs approval, making hospitals more efficient. All these will be able to be successful through AI. So AI system can, for example, detect disease like cancer better than human doctors with a national database of medical scans. AI will keep getting better, reducing mistakes, and making doctors' jobs easier. AI will also speed up developing new drugs. Today, as in this year, it would take over 10 years and 2.6 billion to create a new drugs. AI simulation could cut costs by 70% and the time by over 3 years, allowing researchers to find a better and cheaper drugs. So another big part in China is agricultural. China is rapidly transforming its agriculture through the use of robotics and automation. The government actually aimed to deploy 1 million agricultural robots by 2030 to fully automate farming by 2040. So on a province level, they are also investing heavily. For example, Jiangsu is actually putting 15 billion into the digital farming hubs, where we call Beidou Guide, which is a navigation satellite system. A harvester are optimizing tea and grapes production. This model we expected to cover 60% of such crops by 2035. So 2040 roadmaps envision a unmanned farm managed by AI with robots handling tasks like strawberry pickings or drone spraying. Having China's full satellite integration will be able to make the precision down to only millimeters. So on that, the economy impact will also be significant. The automation, 70% of field works could actually shift 15 million rural workers to urban industries. So on this part, it will be a huge labor change shift in terms of industry. So we always talk about EVs, right? Right now, China is leading in a global EV revolution. So for the past 8 years, China has been the world's largest EV market, capturing around 60% of global sales in 2014. China government actually aimed to boost EV sales to 40% of all new cars by 2030. China is also racing ahead in autonomous driving. The country's AI development plans target mass commercialization of self-driving cars in major cities by in the next 10 years, in the next 5 years. By 2040, our analysts actually project the EV markets to reach 40 million units, far surpassing Europe's 15 million. In terms of smart vehicle market, it's actually still also booming. Sales are forecast in the middle chart to hit 20 million in 2026 and 3 million by 2030. The smart electronic vehicle transformation is enabled by China's strength in AI and battery technology. AI is optimizing battery performance, also enhancing the range and the improvement in charging efficiency. So in terms of aviation, China embarked on one of the most aggressive infrastructure programs ever seen. The country actually crowned achievements as the world's largest high-speed rail network. Beyond rail, China is also building the world's largest highway system, which has surpassed even the US. Now, at this moment, the focus is shifting to air travel. China is pursuing a transportation superpower strategy aiming to expand its airport network to over 400 by 2033. This will enhance the connectivity between rural and urban areas. The domestic travel and international travels are both blooming. We actually see the domestic travel passenger actually exceed pre-COVID level by 11% in 2024. China is also growing trade ties, especially with ASEAN, Latin American, and Middle East. So to support these air transport growth, China is investing in next-gen technology like autonomous air traffic control, AI-powered cargo handling, or sustainable aviation fuels. So right now, domestically, is aircraft makers is also challenging the Western rivals. So moving to a little bit lower in terms of the airspace, right? Beyond the traditional aviation, the China is actually rapidly developing its low altitude economy, which is the activity within the airspace below 1,000 meters. This includes passenger transport, logistic, agricultural, civilians, and emergency response. The Chinese government and with other 30 provinces have actually incorporated a low altitude initiative in their plans. Cities like Shenzhen, Hangzhou has been designated as a pilot zone for sub 600 meters operations. So for the market size of this economy has already exceeded 500 billion RMB in 2023, and it is expected to reach 3.5 trillion by 2035. So drones are also revolutionizing the logistic and delivery in China. We can actually, tourists can actually order something in Great Wall and can receive it through drones with the enhancing assets in remote areas. So next will be on green energy transition. So China is the world largest contributor to clean energy, holding 30% of global market shares. And the country is planning to maintain its leadership through 2040 through AI-powered enhancement. Its target to reduce 20% non-fossil fuel energy by 2025. 2025, AI will play a big role of it. In offshore wind, AI also enhance the resources enhancement to reduce costs alongside with reducing coal. China is building a national-wide smart grid and a large-scale energy storage to ensure the stability of its growing renewable infrastructure. So all these we are going back to how did China done it all, right? In terms of education or research and development. So education has been a cornerstone of China labor productivity growth. In 1999, a higher education expansion plan transformed the system, significantly increased the university enrollment. The government spending on the left chart actually on education rose from 1.9% GDP in 2000 to 4% in 2022, reinforcing the human capital development. So as a result, the proportion of worker with at least a associate degree surged from 7.4% in 2019 to 25.7% in 2023, which we see in the middle chart, strengthening the China's knowledge-based workforce. China's long-term vision is to become a strong education nation, but by 2035, a key priority is to expand the high-quality undergrad programs in strategic fields like technology, science, and new energy. So one of the most important things is that China is actually a pioneering AI education as a national strategy. It was the first country to introduce AI as a standalone academic course, which is mandated AI instruction in all school next year. So this aggressive AI talent development is very important to China's bordering technology ambitions. But there will be I would say, the retaining the top AI researcher remain a challenge as many moves to a foreign tech companies for better opportunities. So in terms of research, right, AI robotics are increasing in terms of China research and development, automating processing and also enhancing data analysis. The AI algorithm can process numbers of data sets and identify patterns faster than human researchers, while the robotics enable precision automation. So China is ramping up R&D investment, targeting a 2.8% GDP by 2030, with at least a 7% annual growth. The spending in 2024 has already surpassed 3.6 trillion. This is driving a rapid advancement. For example, the scientific journal publication actually rose by 8% last year, with 60% of them ranked as the global top 25%. So the results are clear. Right now, China, we can see on the right-hand side, are leading in 57 out of 64 critical technology, up from only 3% in early 2000s. It ranks first globally in patenting, with AI-related patents account for 38% of the world's total in 2023. So through sustained investment in both education and R&D powered by the AI and automation, China is rapidly advancing its technological capabilities and challenging global leadership across a wide range of technology fields. So I will stop here. I will let Nathan to talk about some structural reforms for our China long-term growth.
Okay, thank you, Byron and Sam, for the deep dive into China's AI progress. So for the next 10 minutes, I'd like to shift gears a bit and talk about some structural reforms the Chinese government is likely to pursue to make China's growth stronger and more sustainable. Next slide, please. So let's start with one of the most important, which is boosting consumption. All right. So right now, household consumption in China is only about like 38 to 40% of GDP. That is much lower than in many other countries. For instance, in the US, we are talking about 65%, and Europe, we are talking about 55 to 60%. Japan is 55, and even a lot of emerging markets have higher consumption shares than China, right? And the main reason behind this is high saving rate in China. So in terms of gross national saving rate, it is consistently like sits above 40% of GDP, like what you can see on the chart here. And that is one of the highest in the world. And that is far above the global average of about like 25%. So to put it simply, for every 100 yuan produced, over 40 yuan is not spent, it is saved, okay? And a big part of that saving comes from the household sector. And like why Chinese households save so much? The short answer to that is lack of security. In many countries, people don't need to worry too much about like healthcare, pensions, or education because the government take care of a good part of that, right? But in China, those safety nets are still not strong enough. It has been improving, but it's not yet strong enough, especially for the people in the rural areas or informal workers, right? So what happened is that everyone ends up feeling like they need to be their own insurance company. Yeah. So, you know, they save for medical emergencies, they save for their children's education, they save for their, you know, retirement. Not that they want to, but because they feel they have to, right? Then there's housing, which is a huge deal in China. You know, owning a home isn't just about having a place to live. It's more like it's more of a symbol of financial success and family responsibility, right? But the thing is that with high property prices, even after the correction that we've seen over the past few years, the monthly mortgage still pulls a lot of money away from day-to-day spending, right? So all of these factors add up to a very, very high household saving rate, and that is holding back consumption. That matters because when people save too much and spend too little, the economy becomes over-reliant on investment and exports. That model worked well in the past, but it is not as sustainable today, especially with, you know, all of these rising geopolitical tensions and overcapacity problems in some sectors, right? So that's why this is the one major reason why we believe the government is now very, very serious about rebalancing the economy. And boosting household consumption is right at the center of that plan. Okay, so what can be done going forward is that we believe the government will roll out more and more policies, and the goal is to give people more confidence to spend. And that means building a stronger safety net, safety social security system. So people don't feel like they need to hold on to every yuan just in case something goes wrong, right? So for instance, we should expect some policies to further improve public health care, to reduce out-of-pocket costs. That can make the big difference. And we should also expect policies to strengthen the pension system, especially for people in rural areas or informal jobs. You know, that would help people feel more secure about retirement. And we should also expect more policies to make education more affordable from kindergartens to university. So that would ease the pressure on parents and allow them to spend more freely elsewhere, right? And on top of that, we should expect some policies that help raise household incomes, especially for lower and middle income families. That is very important because this group of people tend to spend a bigger share of what they earn. They have a higher marginal propensity to consume, right? So supporting them has a direct impact on consumption, okay? So to wrap up, yes, China's household saving rate is high, and it reflects a lot of, you know, a deep structural gaps in the system. But the thing is that if those gaps are addressed, it can unlock spending and help shift China toward a more consumption-driven economy, which is exactly what the government will do, we believe. All right. So the next thing I want to talk about is something that's been right at the heart of China's transformation over the past decade, which is urbanization, okay? And most importantly, what we should expect in terms of urbanization in the next 15 years. But first of all, a bit of context here. Since the late 1970s, when China began opening up its economy, urbanization has been a massive driver of growth. For instance, back in 1978, we were talking about 18% of population lived in cities, 18, 1-8. Today, the number is close to 64, okay? That means over 300 million people have moved from the countryside into cities, powering factories, building infrastructure, and helping the services sector take off, But this was not just about moving people into cities. It was a major economic engine, A lot of literature showed that between 1980s to 2010, urbanization contributed a lot in terms of GDP growth. On average, it was like a 3 percentage point contribution to GDP growth on average, okay? And during the process, cities like Shanghai, cities like Guangzhou, most of them became productivity hotspots. And, specific economic zones like Shenzhen attract a lot of foreign money and evolved into export powerhouses. And at the same time, China also built the world's largest high-speed rail network, giving a huge lift to regional development. And and here's the thing: urbanization itself is also evolving. So going forward, what we should expect is that in terms of urbanization, it is no longer just about expanding as fast as possible. It's more about growing smarter. Okay, it's about building cities that are not only bigger but better. We're talking about something more livable, more inclusive, and more sustainable. Okay, and in fact, we are already seeing that shift is happening. For instance, in Hangzhou, right, the city in Hangzhou is using AI to manage traffic and energy use. And another example is that in the Greater Bay Area, we are seeing deeper and deeper integration between Hong Kong, Shenzhen, and Guangzhou, right? And there's also progress on the hukou reform, the household registration reform. More rural migrants are gaining access to urban services like healthcare, education, and housing. And on top of that, e-platforms like Pinduoduo are, helping farmers sell directly to urban consumers, and that supports rural incomes and, narrow the gap between city and countryside, right? So in terms of urbanization rate, we think that China's urbanization rate could hit 75 or even 80% by year 2040. Okay, so that's over a million people. That's over 1 billion people living in cities. Okay, so that will open up huge opportunities, and it will also bring some potential challenges for sure. But the good thing is that there are lessons we can learn from international experience. For instance, the integration between urban and rural areas. If we look at Japan, for instance, cities like Tokyo and Osaka boomed rapidly during like 70s, if I remember correctly. But many rural towns back then were left behind, right? People are getting old, young people moved away and never come back, and many rural economies just shrank, So China definitely wants to avoid going down that same road. Okay, so to keep rural areas vibrant, technologies will be very, very important here. For instance, things like drones, AI power farming that Byron just mentioned, and smart irrigation, all of this will help modernize agriculture, okay? And of course, they also need a better banking system in the rural area, more support for small farmers and entrepreneurs, and stronger infrastructure and public services. So the goal is to make rural areas places people actually want to stay in. All right. Yeah. So maybe for the interest of time, I will go to the next and the last topic, which is the SOE reform. SOEs, we know that have been, SOE have been the backbone of China's economy for decades, right? And they play a big role across all kinds of sectors, from energy and utilities to finance and transportation. But here is the issue: while SOEs are central, they are not always the most efficient players on the field. All right. So one of the biggest problems is that they often get easier access to financing, and the drawback is very obvious. It can lead to over borrowing and high levels of debt, right? So even worse is that many these firms operate under the assumption that if things go south, the government will bail them out, right? So the consequence is that they tend to take more risk or just stop improving. So that in turn creates a lot of other problems. For instance, it weakens financial discipline. It also crowds out private firms that could probably do more with the same resources, right? So if you look at the chart here on the slide, in industries where SOEs dominate, like steel or utilities, those over the left side on this chart, there's often less competition. And without competition, there's less incentive to boost productivity or get more efficient, right? So on the other hand, in sectors where private firms are more active, like IT or pharma or autos, you can really see the difference. Productivity over there is higher, innovation move faster, and companies are quicker to adapt, right? So the contrast here is pretty clear, I would say. When there's more competition, performance improves, okay? So the good news here is that policymakers in Beijing, they are all well aware of this, and SOE reform is already underway, right? So one of the major goals here is to reduce the implicit government guarantees. And what it means is that capital should flow based on economic fundamentals, not just political ties. So that also means banks and investors will need to focus more on risk and less on who's connected, right? And there's also a push to open up more sectors through to private participation, areas like energy, telecoms, and finance. These sectors are traditionally dominated by SOEs, but in recent years, they are gradually being opened to new players. Okay, so the goal here is to level the playing field and make everything more efficient. So the conclusion here is yes, SOE reform is a complex challenge, but if these changes are followed through, it should unlock a lot of untapped potential. Okay, so these three are the major structural reforms that I like to discuss today. Yeah, that's it from my part. Back to you, Tamo.
Thanks, Nathan. We have run out of time. Okay, a bunch of questions. So one question, of course, came from the audience today. Jessica had a question on the near term. And then I had a bunch of questions for you, but we don't have time to go through anything. But this is what we're going to do. Since this is a WebEx call, we got all 150 participants' email addresses. So we will address the question from Jessica or Rebecca and the question that I had for you in a separate email that we will distribute to all the attendees in the call. So to everyone, thank you for attending. Sorry, it was a big paper, lots to cover. We ran out of time. We couldn't really answer any of your questions, and I actually had a couple of questions because I think some of the medium-term stuff is absolutely fascinating. Fear not, we will do follow-up on these issues by email, and we will have more follow-up seminars. I think Nathan and Mo and Sam and Byron can do 5 more seminars just on each of the chapters of this paper. There is so much rich stuff in there. So thanks for hanging in there, but we'll get back to you over email, everybody. Thank you, team. Great job. And until next time, everybody, take care, stay healthy, stay safe.
Thank you.
Thank you, Tamo.
Bye-bye.
Thank you, everyone.
Bye.
Bye-bye.
Thank you. Thank you. Bye bye.